to ensure availability of power during high demand period. This is our segment Midcap Spotlight. Vivek, we focus on power stocks, but tell us first up, what are the steps that the ministry has taken to ensure there's uninterrupted power supply in this scorching heat that we are talking about?
Like you mentioned, the main worry that the Ministry of Power has is how do they get prepared for the scorching heat. So the upcoming summer season is the peak season. That is the season in which the demand is the highest. Last year, we saw records being beaten in terms of every day, how the peak demand or the peak deficit kept going higher. So on the back of that, there has been some proactive steps that's been taken. First up, we look at gas-based power plants. So what the Ministry of Power has said is that gas-based electricity generating plants have been asked to operate under Section 11. Section 11 basically means that this is under emergency measures where there will be a cap on the kind of returns that the gas-based power plants will actually be operating at. The move is mainly, like we mentioned, to ensure availability of power from gas-based generating stations during the high demand period. And this particular move is valid from May 1st, 2024 to June 30th, 2024. And like expected, the impact of this will mainly be on NTPC and Torrent Power, which has close to 1.5 gigawatt of stranded gas power plants, which they could bring into impact. Now, talking about coal-based plants or thermal power plants, Section 11 is already underway, and there has been an extension of these measures. So, top impacted company would be Tata Power. Remember, Tata Power has a coal plant functional at Mundra, and they at this point of time do not have any long-term PPAs. So once they operate under Section 11, they are able to go ahead and make the minimum required returns for this particular facility. So this particular measure for coal-based plants is extended up till 15th October 2024.
Okay, so this is about what this section really means. So thank you for the explainer. But of course, the next question comes is, what is the impact on the power sector as a whole if we talk about individual stocks, and some names that you can give us?
Okay, so the first talk or the first impact, let's look at it from the gas-based power plants point of view. So number one, gas IPPs or gas independent power producers, that will be in focus. There are quite a few PSU companies that do have gas-based facility, but the stock that we could focus on right now is Torrent Power. Torrent Power has 1.5 gigawatt, like we mentioned earlier, of stranded capacity or of free capacity. So what does this particular move do for the power sector? The move will de-risk the grid India's reliance on thermal power to go ahead and meet peak demand. Remember, India has almost 25 gigawatt of gas-based power capacity, which are just operating at close to 14% plant load factor or PLF. So this will significantly ramp up as Section 11 comes into impact. The expected impact is obviously the fact that most of these companies will actually start operating at higher PLFs. Now, we have a report from IIFL on this particular development. They are saying that key beneficiary, of course, would be Torrent Power, given that they have a merchant capacity of 1.5 gigawatt. The move will also improve the commercials of stranded IPPs, which are currently not being functional. They're making an assumption that if Torrent Power's facility could operate at close to 35% PLF at the current gas prices, it could add close to 12 to 15% to their FY25 profit before tax. So that's a significant impact. However, they also, IIFL also states that the market may have been anticipating that Torrent Power could have sold this particular capacity in the open market or in the, in merchant market, where they could have got higher prices. Currently, remember, prices will be capped. So on the back of that, you are seeing Torrent Power in focus today. It's been a volatile move for the company. They're also saying that, if this particular scheme is extended for FY25, it can benefit gas-based importing as well as trading companies, which include names like GAIL as well as Petronet LNG. They may see 5 to 10% EPS upgrade is what IIFL believes. They also see IEX benefiting from this on the back of higher volumes that the gas exchange could see.
Okay, all right. So that's an exhaustive list. Thank you so much, Vivek, for joining us with that.